It's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. Wednesday evening, April 27th, 2016. Another jam-packed newsletter in store for you tonight. We got crude, S&P, gold, and of course the euro. Markets are reacting to the FOMC announcement this afternoon. Crude oil and the S&P are both pretty bullish here this evening and trying to retest their highs, while the gold and the euro are both incredibly range-bound and trying to find some direction ahead of tomorrow's session. Get a plan for all four of those markets for you guys. Before we jump into our charts and look at some strategies for tomorrow, I do want to remind you, the only place to watch the full-length version of this nightly newsletter video is here on our blog at sidewaysmarkets.com. If you're watching the video on our YouTube channel, make sure you subscribe to the YouTube channel and then follow the link in the description of the YouTube video and come over and watch the full-length version on our trading blog. While you're here, don't forget to grab a free pass to attend our live trade room as a guest. In the lower left-hand corner, I'll remind you to join the mailing list for our nightly newsletter. I'll send you an email every evening, Monday through Thursday evening, when the nightly newsletter is ready to be watched. Right below the video tonight, you'll see a spot to download all the charts you see me using in tonight's video. You can have those ready on your computer by downloading them. Follow that link right below the video on the blog. And of course, over on the right-hand side, always a very popular option. You can learn more about what it means to be a student here at School of Trade. Join our free trial membership on the right-hand side. As I always remind you guys, we're standing by 24/7, 365 to answer any questions you may have. Use the live support button on the right-hand side of the blog if you need any assistance along the way. Boy, oh boy, it feels great to be here this afternoon. Hope everyone had a great Wednesday out there. I had a great Wednesday. Boy, what a great day it was today. A little bit of inventories, a little bit of FOMC. Not a lot out of the FOMC announcement that was really any change. They did remove the words global concerns. I'm not sure whether that means violence or whether it means economic tensions, but the bottom line is it was pretty much standard operating procedure for the Fed right now. They're pretty much going through the motions right now, as we had anticipated, right? So market sees that as being the green light for more easy money before they raise rates, possibly in the next meeting come June. We'll wait and see how that goes as the time progresses. Looking at the calendar tomorrow morning for April 28th, Thursday morning, I want to show the global calendar tonight because we do have some important news this evening coming out of Asia, all the way down at the end of the session. We do have some pretty big announcements coming out of Japan overnight here tonight. We got the CPI from our good friends in Japan starting at 7:30, 7:50, right into 8 o'clock Eastern time tonight, just a few hours away from that. So if you are trading the Asian session, be aware you've got some major news coming out later on tonight. And then tomorrow morning, we got more major big impact news in the EU session. We're going to hear from Great Britain tomorrow morning. Most importantly, though, the economic sentiment in the EU at 5 a.m. tomorrow morning. If you're trading the London session tomorrow morning, be aware that 5 a.m. news is going to be the market mover tomorrow. If you're here with me tomorrow in the trade room at 8 o'clock Eastern time, we've got the GDP report at 8:30, jobless claims at 8:30. Those will be the two big news events of tomorrow morning's session. The rest of this stuff is minor reports, and we'll talk about tomorrow night when we get there. So again, big news tonight out of Japan, big news tomorrow morning at 5 a.m. out of the EU, and of course, we've got GDP and jobless claims. Jobless claims is pretty much typical for Thursday morning, but we got GDP tomorrow morning as well, which is definitely expected to be a market mover for us here in our trade room tomorrow morning, which opens up at 8 o'clock Eastern time. Look forward to having you there. Let's jump right in. We'll go crude, S&P, gold, and a little bit of euro here tonight. Relatively easy, relatively simple and straightforward charts here this evening. We've had a very volatile month of April. It's been pretty choppy here so far, so it's a little bit of an easy one here tonight for us as we prep for a Thursday session. Crude oil, mighty bullish in trying to retest the highs of the range this evening, but a recent channel overshoot and combined with falling resistance may give the buyers another chance to buy this market at a lower price tomorrow. The major bull channel will be waiting as support if we get a deep correction lower, while the minor bull channel has an overshoot at the high, which will likely either overshoot the low or give those sellers a double overshoot at the high for a possible reversal tomorrow. The measured move has already been reached, which tells us to expect another test of the high. Most measured moves do double top, where we can also expect to see the sellers to be waiting for a possible reversal back to channel lows. Meanwhile, that cute little trend line, that little red trend line, that falling resistance trend line, that may keep the buyers from aggressively finishing the retest of the highs until after a correction back to the lows of the channel. Right now, we have the story being told by this market right now. We clearly have a bullish market on the chart right now. We're rotating from the low up to the high, low up to the high. We have a very important clue here, an overshoot. That overshoot typically leads to an overshoot on the opposite side, right? So one big clue is overshoot. The buyers overdid it a little bit. When I see an overshoot, if I'm long already, I see it as a reason to take profit. If I'm looking to sell, I look for as an overshoot as a chance to sell into that extreme overdoing it. Now, one thing we do see is that the candlesticks are not getting larger as they're going higher. A very easy clue for exhaustion is when you see larger candlesticks as it goes higher. You'll notice if you look at the clues here on the candlesticks, we're not getting those exhaustion candles. That leads me to believe there's a big old bullseye right up at that high here, right, for those buyers to finish the job. It may happen in the short term, but the next thing we're seeing here is this falling resistance trend line. Now, again, without any real exhaustion, evidence of exhaustion with the candlesticks, we definitely would expect this market to probably try, right, to make this move happen going higher. But oftentimes what happens is when you see a market that's really been running away like this, and then you see that resistance trend line overhead, this may spook the buyers. It may spook the buyers from trying to really even attempt this, and they may look for a trap low, get a lower price, breakout, pull back, and then of course, back up to that measured move. Either way you slice it, though, that falling resistance trend line can be used for a breakout pullback by the buyers here, or trap low, breakout pullback for the buyers a little bit later on in the process. So that's the story is that we're seeing right now. Get some simple technical clues in the chart this evening. Get a bull channel times 2. We have 2 bull channels here right now. First of all, we have one of those pending channels, right? Kind of the untested bull channel, high down to low, low up to high. This will be significant support down here if we do end up pulling all the way back just above that $44 a barrel level, right? So that's going to be an easy area for some traps before we make that move back up. We'll have to wait and see what happens for that, obviously, because we're a good distance away from that right now. But that is the first bull channel, and the first bull channel tells us to look for seller failure. You know how it always goes, failure into strength, strength into pullbacks, and pullbacks on the way back up, right, to that high. And, of course, channel rotation is what they're going to be looking for, right? Channel rotation is what they'll be looking for. Now, the second channel is the most important channel. Here we have this more minor channel. This is a lot more proven. And again, like I said before, this minor channel is an overshoot. Overshoots typically do one of two things. One, we overshoot the opposite side, or two, a possible double overshoot. And I wouldn't be surprised if we get a double overshoot here, just because, again, as I said before, we don't have any signs of exhaustion out of those candlesticks. So I would definitely expect to see possible double overshoot right at the high. Last but not least, you had that falling resistance we talked about earlier. That falling resistance, in my opinion, is the only real reason why this thing may not continue through and it may rotate lower. Look for a measured correction, trap low. There's still going to get around that trend line, get above it, break out, pull back, and go. That's how you're going to want to look for the buying opportunities around that falling resistance. The bottom line, though, is we're definitely bullish right now, and of course, until proven otherwise, we'll be looking to buy here, either buying pullbacks or buying traps at prior support levels. Here's the buyers want to see. Break it right on down here for us. That way everybody's covered here for tomorrow. The bulls want to see a breakout pullback above falling resistance, right? Breakout, pull back above falling resistance. And then, as you can see, though, there's not much room until you get back up to that high. So it's going to be a scalp back up to that high. What else do the buyers want to see? The buyers also want to see a trap low at support. This support level at 45.05. Look for price to trap low. Sellers fail. Again, watch out for that falling resistance. Breakout, pull back, and go. That's going to be the easiest way, right, to get in off that, because again, you don't want to buy into that resistance. The ideal scenario clearly would be if we really trap low, right, really trap low, then see seller failure. You can buy into that failure. Just know that you got to have enough room before you get to that falling resistance. If you can't get it there, breakout, pull back, right, and off we go to the races. Now, don't forget, again, if we do end up any of these areas below, right, traps, again, with such a strong bull market, combine that with that lack of exhaustion, I can't imagine buyers aren't going to see every pullback right now as a chance to get in at a cheaper price. Okay, now what about the bears? The bears have a little bit of difficulty here going higher. Okay, bears really have some trouble here right now because of the bears. First of all, double top reversal at the measured move. We have a measured move at 45.55. We also have a triple measured move up at 46.20. Now, most measured moves are not going to just reverse because they hit the measured move. Usually, you're going to see that double top into the measured move, and then you'll see buyers fail to keep it below the level of resistance, and sellers will win that battle in the short term. Just remember, though, when we're looking for failures, if we're trying to sell in a bullish market, remember, it's only about a 50% win ratio on that. Make sure to use a 1 to 2 risk-reward ratio because we know we're trying to fade a bull market, right? We're trying to call a reversal. So you're going to get about 50 wins, 50 losses over 100 trades doing something like that. You got to make sure that you get your money out of it, right, with that larger target, twice as large, right, than your stop loss is going to be. Okay, so keep that in mind if you're looking for the double overshoot, the double top reversal at the measured move, right? So measured moves are both here, test once, test twice, double top reversal, okay, which is very, very common. But again, you're buying or you're selling into a bull market, so make sure you protect your risk to reward. Next up is a double overshoot at the channel high. Now, this is kind of an interesting one because you've got one channel high, right? Double overshoot, reversal. Okay, again, another one of those 50-50 trades. It's more of a 50-50, maybe a 60-40 on a good day. Most important thing though is be careful, right, with those counter trend reversals. You got that one here. We already have one overshoot already. A second overshoot going higher, right? A second overshoot going higher. That will also be ripe for sellers to try to fade that move higher, right? Again, very difficult for me to say to be a seller right now in this market, but those are going to be two options for you. Now, I also should put this on there. I forgot to add this on here. Would be a lower low, breakout pullback below that channel low. This is one of those times where I remind you, what's the best way to sell a bull market? Wait for it to turn into a bear market. I know it sounds very simple like that, but that's literally what you've got to do. If you're trying to sell a bull market, you have very low reliability on your trades. So the most important thing is wait for it to make a new lower low. This is where sellers, right, can hold a pullback and take control of this market. Try to use that low of that channel as resistance, and that'll give you the opportunity here that you need. What you also remember is that that's also where the buyers are going to be looking for you to fail, right? So if you're wrong, get out, right? If you're wrong, get out because that's where the buyers are going to be looking for a trap low and fail. All right, guys? Again, I have to assume tomorrow any pullback right now on crude is going to be ripe for being bought up, right, as traders try to get a cheaper price. Moving on here from the crude oil to the S&P 500. Bullish, and trying to finish rotation back to the high of a bull channel. A lot of clues in this chart tonight. The recent trap low, right there on the center of your screen below that 2088, that recent trap low is a big sign of strength for the bulls, telling us that tomorrow may bring a strong move higher in the medium term. The bull channel tells us to expect rotation from low up to high and then back down to the lows again. The trap low occurred at the recent swing low and shows the buyers' extreme strength going into the closing bell. Now think about that. They're not even taking